Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 6th, 2025, and we're diving into Cencora's fiscal 2025 third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cencora has reported some impressive numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Cencora reported a revenue of $80.7 billion for the third quarter, marking an 8.7% increase year over year. John, what are the key drivers behind this growth?
The growth is primarily driven by an 8.5% increase in the U.S. Healthcare Solutions segment and a 10.5% increase in the International Healthcare Solutions segment. This reflects strong market demand and strategic acquisitions, such as the acquisition of Retina Consultants of America, which has bolstered their revenue streams.
And how about profitability? The adjusted EPS came in at $4, beating the analyst forecast of $3.78. What contributed to this earnings beat?
The adjusted EPS of $4 represents a 19.8% increase from the previous year. This was driven by a 20.6% increase in gross profit, thanks to improved margins and operational efficiencies. The gross profit margin expanded by 35 basis points to 3.60%, highlighting effective cost management and strategic pricing.
Operational efficiencies and future outlook. Operating income also saw a significant increase, up 29% year over year to $0.9 billion. What factors contributed to this improvement?
The increase in operating income is largely due to the rise in gross profit, which was partially offset by higher operating expenses. These expenses grew by 17.3%, mainly due to increased distribution, selling, and administrative costs following the RCA acquisition. However, the overall efficiency gains and strategic investments have paid off.
Looking ahead, Cencora has raised its adjusted EPS guidance for fiscal 2025 to a range of $15.85 to $16. What does this indicate about their future prospects?
This upward revision in guidance reflects Cencora's confidence in sustaining its growth trajectory. The company is focusing on digital transformation, talent investment, and productivity enhancements, which are expected to drive continued earnings growth. Additionally, the declared dividend of $0.55 per share underscores their commitment to returning value to shareholders.
Segment performance and strategic initiatives. Let's delve into the segment performance. The U.S. Healthcare Solutions segment reported revenue of $72.9 billion, an 8.5% increase. What drove this growth?
The growth in the U.S. segment was fueled by increased sales of diabetes and weight loss products, as well as specialty products to physician practices and health systems. The acquisition of RCA also played a significant role in boosting segment revenue and operating income, which grew by 29.1%.
On the other hand, the International Healthcare Solutions segment saw a decline in operating income by 12.9%. What challenges are they facing?
The decline in international operating income is primarily due to lower performance in their global specialty logistics and consulting services businesses. However, on a constant currency basis, the revenue growth was still robust at 8.8%, indicating underlying strength despite currency headwinds.
Key takeaways. In summary, Cencora has delivered a strong performance in the third quarter of fiscal 2025, with significant revenue growth and an earnings beat. Their strategic initiatives and acquisitions are clearly paying off, and the raised guidance reflects a positive outlook. John, any final thoughts?
Cencora is well-positioned for continued growth, driven by their focus on strategic investments and operational efficiencies. The company's ability to adapt and innovate in the healthcare solutions space makes it an attractive prospect for investors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cencora's performance in the comments below. Until next time.